So your money is being put to work 24 hours a day. That should be really good news, but the problem is it's being put to work for other people's families, not your own. So rather than the banking process working against you like it is today, you can actually turn around and have the banking process work for you. Listen, you don't need banks. Banks need you. Stick around to the end of this video and I'm going to show you exactly how you can get the banks out of your life forever and you can start having your hard-earned money flow back toward you instead of flowing away from you and working for banks. The money's going to start working for you and your family. The title of this video is How to Say Goodbye to Banks Forever. And I said, look, banks, you don't need banks. Banks need you. What exactly do I mean by that? Well, let's just think about the banking process for a moment. Why do banks exist? And we're convinced that banks exist to help us and to store money and keep our money safe and do all these other things. You know, maybe some of that's true, but in my opinion, that's not true at all. Banks exist to sell money. They sell debt. They exist to create a profit for the shareholders of the bank. So you and I go to work and we work real hard for our money and then we get paid and that money gets deposited in what's called, Vern's checking account. But it's actually TD or CIBC or Scotia. It's actually a bank, and that bank has owners. So my hard-earned money is being deposited in someone else's bank. Okay, I'll say that again. My money is being deposited in someone else's bank. Well, what is the bank actually doing with the money that their customers deposit, the money that they're supposed to care so much about? Well, what they're doing with that money, are they just letting it sit still and collect dust and wait for you and I to come and get it for our needs? No, they can't do that. The bank can't let the money sit still because if the money sits still, it isn't working, it isn't earning, it isn't doing anything. It's useless to everyone. So the bank must put that money to work. In what ways are they putting the money to work? Well, they're lending it out in the form of mortgages and car loans and consolidations, you name it. They lend that money out to hardworking Canadians to create income streams to grow profit for the shareholders of that bank. So your money is being put to work 24 hours a day. That should be really good news, but the problem is it's being put to work for other people's families, not your own. That is a problem. So a bank cannot actually issue a loan without a deposit. So who needs who here? Who's depositing money in the bank? Who's capitalizing their business? It's you. Your money is being deposited in their bank and then they're putting that money to work. So the reality is you don't need banks. Banks need you. Well, if banking is the problem, all our money being deposited in someone else's bank is a problem, what on earth do we do about it? Well, we want to change where we're sitting in the conversation of banking. We want to become the banker. If I was the banker and the bank owner, if all the money is flowing to the bank, if I became the bank owner and the banker, then the money would be flowing back toward me, my bank, and my family, and money would be working for us 24 hours a day. And I have an idea. I have a solution for you. I'll tell you exactly what my family and I do. Instead of depositing and storing our money in the commercial bank and borrowing money from the bank and making payments to them, what we do is we store our capital. We make deposits in the form of premium into something called a permanent participating dividend paying whole life policy, ideally with a mutual insurance company. Simply put, mutual insurance companies, it just means that the company does not have shareholders. They have zero shareholder interest. You can't go and buy a chunk of their business. The only way to become a co-owner in the business of a mutual insurance company is to own a permanent participating dividend paying whole life policy. It's a legally binding contract that I own and I control. And there's a contractual guarantee that says that there's cash value. You could replace that word with, you could think of it as equity. Think of it as equity. But what it is it's called cash value. And it grows and accumulates in the policy every single day, such that the total cash value rises to match the total death benefit of the life insurance policy by the time the life insured reaches age 100. So if I have $1 million death benefit and I'm 37 years young today, I can guarantee that the cash is going to increase in the policy every single day by, whatever that number is. If I looked at the number of days between now and my age 100 and I divided that by the starting death benefit of the policy, I could determine exactly how much the daily cash growth is going to be because it rises on a schedule. Structure the policy such that as I continue to make deposits, they are deposits. The premium is not a cost to me, because guess what? Isn't all your money already being deposited in someone else's bank? Isn't it being deposited against the principal and interest of your mortgage? Isn't it being deposited to pay back your car loan? Isn't it being deposited in prisons like RRSPs and you name it, whatever else? We're always depositing money, aren't we? It's just that most of the money we're depositing is being out of our control and being put to work for other people. I choose to deposit my money. I prioritize my premium and my policy loan repayments. I'll mention a word about policy loans in a moment. I prioritize sending money to the life insurance company, the business that I co-own, over any other use of money. I deposit the money into my system first to create the momentum and for that company that I co-own to capture the financial energy of my hard-earned money, rather than the commercial bank capturing that financial energy. Because I know at the mutual insurance company, the money is being put to work for me and my family and all of the other co-owners. If I put money in the commercial bank, the money is being put to work for the co-owners, the shareholders of the commercial bank. And that just really makes me feel icky. That does not work for me at all. I'm the one doing all the work. The money should be put to work for me and my family. I mean, that just makes sense. So the process of becoming your own banker, the infinite banking concept, that's what it's all about. We need a tool to facilitate the process of banking. And the best tool for the job that we've been able to find, as R. Nelson Nash taught us in this book, Becoming Your Own Banker. R. Nelson Nash is the founder, the person who pioneered the process of becoming your own banker back in the 1980s. And he taught us that the best tool for the job, becoming your own banker, has nothing to do with a life insurance policy, but the best tool is a permanent participating dividend paying whole life policy. Now, I'm capitalizing the policy, and as I pay premium or make deposits into the policy in the form of premium, my death benefit is actually going to rise over time. As I deposit some of that premium, it's going to purchase additional paid up death benefit. And I'm also a co-owner in the business, so I'm eligible to receive a share of the divisible profit every single year from the insurance company. And those dividends are going to be rolled back into the policy to continue to build the death benefit. Well, if the death benefit's continuing to build, well, the cash value has to rise to chase that death benefit by age 100. So if my death benefit's expanding and the window of time is shrinking, the cash accumulation in the policy can only accelerate. The cash value is completely guaranteed by the insurance company. It can never be reduced. It can never be taken back. And I have the contractual right to borrow up to 90% of the total cash value anytime I ask for it. And when I borrow against the value rather than withdraw it, if I borrow against it, I don't interrupt the compounded growth on the cash inside the policy, the cash value. So I'm always creating more and more momentum on my money. So I can access that money and go and achieve any financial objective that I want without interrupting the growth. And then I can make payments back to my own system instead of making payments to someone else's bank. So I need a car. A car is a common thing that all people need, right? I go and access a policy loan after building up the policy. There's a capitalization period, right? I build up the value, I access a loan, I pay for the vehicle. And then if I were borrowing money from a commercial bank, I'd have to agree to a repayment schedule and money would flow away from me. Okay, because I'm a responsible banker, I'm a good customer. Well, if I borrow money from my own system, I'm going to turn around and create my own repayment schedule that I'm going to agree to because I'm already someone else's really good customer. Why don't I just become my own really good customer? So I'm going to start making those payments back to my own policy. So now my cash value is growing every day, plus I'm replacing the money that I borrowed. So I have access to an ever increasing pool of financial value so that I can go and accomplish more objectives for my family. So rather than the banking process working against you like it is today, you can actually turn around and have the banking process work for you. I like using car examples because that's actually a personal story of my own. You can actually check out the playlist here beside me, and you'll see one of our past recorded webinars where we share, case studies and personal examples of how we've used our own policy system to accomplish objectives. Back in August of 2021, at that point, I had built up enough cash value in my policy system to access a loan that was large enough to pay out my car loan from Ford Credit Canada 5.5 years early. Every 2 weeks, I was sending $299.37 for 2.5 years of Ford Credit Canada. They were just pulling money out of my bank account. All these, you ever see those commercials back in the day? It was a credit card company or something, or a bank commercial. It talked about hands in your pockets. That's what banks are. Dealerships, all this stuff, God bless them, they serve a purpose, right? But they're always, their hands are in your pockets. Take a look at your online banking right now and look at your debit to deposit ratio. I guarantee that your debits, money coming out of your account versus money being deposited in your account, are dramatically off balance. Right now, since implementing the process of becoming your own banker, there is far less hands in the pool. There's far less people pulling money out of my bank account. In fact, I control all the payments. I don't have any automatic debits that come out of my accounts. So for 2.5 years, they were pulling money out of my bank. The whole time I was building up my policy system, I accessed a loan, I wiped out the car loan, but I didn't stop the payments. I simply redirected where the payments are flowing and who is getting the money. Me and my family are now getting use and control over that capital. We're the ones accumulating and piling up that money so that we can go back and reuse it again. So this is what's possible when you implement the process of becoming your own banker. We're already building toward our next major expense so that we do not have to go and rely on someone else's bank to provide the capital that we need to accomplish our objectives. They're my objectives. So why am I relying on someone else's bank to help me get them done? It's absurd, and it has to stop. So Vern, this all sounds well and good, but what the heck do I do? How do I get started? Well, what you have to do is you have to educate yourself. At the risk of sounding cliche here, okay, everybody's out there trying to sell you the next big thing, the greatest product, or the this or the that, the solution. The solution that I'm selling you is empowerment. You need to educate yourself because it's your money. And the book is titled Becoming Your Own. The key word is your own banker. It's not, hey, go buy this thing and then all of a sudden set it and forget it and now you're your banker. Or, hey, come and be super dependent on the Ascendant or the Ascendant financial team or the authorized infinite banking practitioner who's going to do everything for you. No, I got to ask my clients. I don't do everything for my clients. I coach them and I train them to implement a process so that they can become more independent versus dependent. Do you want more dependence in your life or do you want more independence in your life? I'm assuming if you're watching this video, that means that you want more independence in your life. That's what you're looking for. So we want to coach and train you to become more independent. And the first step is for you to take action. And that's to educate yourself. So by checking out the playlist beside me that I mentioned earlier, and by checking out the link in the post description below and accessing a copy of this book, or going to ascendantfinancial.ca and getting a copy of the book. That's the number one thing. Google it, order it from Amazon. It doesn't matter what you do, but get your hands on the content. Keep listening, keep watching, keep learning. Take the time to educate yourself so that you can be informed and you can come up with intelligent questions to ask so that you can determine if this process is going to be a good fit for you. Because guess what? It isn't for everybody. That's just simply the truth. Can it work for everyone? Absolutely. Is it for everyone? Not at all. Why? Because if I spend more than I make, if I have really bad financial habits, if I'm not earning an income, look, we can't get something for nothing. We have to have some capital to get started. I don't have to have millions of dollars, but I have to have something. And it takes discipline, and it takes commitment, and it takes drive. It takes understanding that it's painful to watch my money walk out the door all the time and work for other people. I want to get out of financial prison, and I'm absolutely committed to it. So that's what it takes to educate yourself and get committed. So 3 steps that you can take is continue to educate yourself by listening to our content and watching our content. Access a copy of R. Nelson Nash's book so that you can read and educate yourself, and access the link in the post description below to get in touch with our team. Schedule a time to get some of your questions answered. So those are some of the actions that you can take immediately to start getting started on implementing the process of becoming your own banker.